The millions of meme coins will probably end up worthless. So when we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying. And we think they're going to become very important in the years ahead. Meme coins, not so. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class.
Cathie Wood contends that the economy is dealing with more serious structural issues, in spite of the Federal Reserve's attempts to control inflation. She thinks that although traditional economic measures don't adequately reflect the real changes in productivity and deflationary forces, technological innovation is being undervalued. Wood emphasizes how disruptive technologies like blockchain, AI, and robotics are not just changing businesses, but also establishing a new economic paradigm that is difficult for established institutions to understand. In the meantime, the bond market is exhibiting red flags, and the stability of the economy may be seriously threatened by liquidity issues. Wood cautions that policymakers are misreading economic indicators, which could result in poor decisions that have long-term repercussions. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
So one of the things we think is going on right now is, and Treasury Secretary Bessent today said he does not believe that we're going into a recession. We think we've been in a rolling recession and that we are actually going to see some negative quarters here. And that's because the velocity of money is collapsing as people, the labor force is worried that, and we're talking about federal, state, and local, quasi-government categories like education and healthcare. There's a lot of fear around job security right now. So we see the saving rate going up. We see the velocity of money coming down. And we do think we'll see 1 or 2 negative quarters. What we believe that will do is set this administration up and the Fed up with more degrees of freedom for tax cuts and perhaps lower interest rates, or at least ending quantitative tightening. Well, we tend not to be very short-term in our focus, but if we're right and inflation is going to surprise on the low side of expectations, we wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called Trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down. Even egg prices have started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation, good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3 cuts. Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If we look at our on-chain analytics, what we see is, I'm sorry, I have to get this off. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up. I think the Trump family is very supportive of crypto, which is great. It's completely different from the environment we had been in. Our view on meme coins, we're not as focused on them. We would not be putting them into our various private funds because, and I think that the combination of AI and blockchain technology is creating millions of these meme coins. We think most of them are not going to be worth very much. We think there are just going to be a few crypto assets that will gain most of the spoils in the entire ecosystem. Well, I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins.
According to Cathie Wood, digital wallets will play a significant role in finance in the future, much like credit cards did. According to her prediction, the majority of consumers would only use a few major wallets, with Coinbase and Robinhood being the frontrunners. Coinbase is at the forefront of cryptocurrency adoption, while Robinhood is notable for its user-friendly interface. She also draws attention to the expanding tokenization movement, which involves digitizing physical financial assets. The fact that Larry Fink, the CEO of BlackRock, has expressed interest in this change suggests that big organizations are keeping an eye on the direction of digital finance. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
The millions of meme coins will probably end up worthless. So when we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying. And we think they're going to become very important in the years ahead. Meme coins, not so. It's interesting. The meme coins will be collector's items. So digital collector's items. And so, of course, some will withstand will withstand the judgment of time, and that may be one of them. But our working assumption is that when you're talking about millions of meme coins, that that's just a step too far, and that most of them are not going to be worth very much. I think what is happening with the stablecoin movement, which again, we're going to see deregulation and legislation this year, we think, which will open the doors to stablecoins. So USDC, that's Circles, USDT, that's Tethers. That's the on-ramp into DeFi, decentralized financial services. So you're already seeing lending and saving and yield harvesting taking place on these ecosystems, which are supported by Ethereum and Solana. And of course, you're seeing wrapped Bitcoin on Ethereum as well. So Bitcoin's trying to get into the game. But in terms of real utility, if you go to emerging markets, and I know this is not this market, but you go to emerging markets where their currencies destroy purchasing power and wealth with massive devaluation. So it's really their policy leaders. They are using Bitcoin in particular, but also stable coins, which is effectively the dollar, as backstops to their purchasing power and wealth, because they've been through too many of these devaluations. So I think the real utility, if you're looking at stable coins and Bitcoin today, is in the emerging markets, really protecting consumers' purchasing power and wealth. Well, our main thesis for both is we're looking for the winners in the digital wallet space. Most of us are not going to have many wallets. You can think about this in the same way you think about credit cards. Most of us don't have very many credit cards. So we're looking for those winners. And, Robinhood and Coinbase are coming at this from different angles. Of course, Coinbase from the crypto first angle, and Robinhood from more the equity end of the spectrum. Both of them have to, Robinhood has nailed the user interface. I think Coinbase is putting a lot of effort into getting that right as well. So we're looking at them as two of the bigger winners, in terms of our own venture fund. And we did start an interval fund, which is a 40 Act fund. I mean, we could see tokenizing that, putting it on chain, and enabling many, many more people to get involved with the private world. And I think other venture capital firms could do much of the same thing. I do agree there's going to be a lot more competition, a lot more ways to fund new companies. So that is true as well. So I'd say this new world's going to be complicated. When we hear Larry Fink of BlackRock saying he wants to tokenize everything, it's big, because it takes a lot to move the needle at BlackRock. So we're watching the tokenization movement very closely for our own purposes as well.
Cathie Wood highlights that she is still confident in her investing decisions, especially those involving Bitcoin and Tesla. She reiterates that she still believes these two to be among her most significant wagers, highlighting them as some of her most enduring and effective forecasts. Wood then turns his attention to the increasing significance of artificial intelligence and how it will influence technology and business in the future. She cites companies like Palantir as being in a good position to assist big businesses in making the shift to the AI-driven era. According to Wood, these platform-as-a-service providers are essential for helping organizations cut expenses, increase productivity, and develop cutting-edge goods and services. She emphasizes how important AI is in bringing about transformational changes in a variety of industries, not simply small improvements. According to Wood's comments, artificial intelligence will be crucial in changing the competitive environment, and businesses that help make this shift stand to gain greatly. In her concluding remarks, she expresses optimism about the future by highlighting the significance of staying ahead of technological trends and embracing innovation as a way to deal with the challenges of the quickly changing digital world. Wood's forward-thinking outlook and conviction that disruptive technologies like artificial intelligence will continue to present significant investment opportunities. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.